When professional investors talk about cheap securities, they don't mean bad or even low-priced assets. The best investors understand that a low-priced mutual fund, exchange-traded fund, ETF, or stock can actually be quite expensive when measured by other market metrics, such as price to book, price to earnings, or net asset value. In investment terms, cheap means valuable. Specifically, value is determined relative to market and industry fundamentals in relation to its future sales, earnings, and other financials. Most investors are familiar with ETFs. They are popular because they offer diversification and professional security selection in a single investment that's easy to buy, hold, and sell. I have compiled a list of 10 cheap ETFs that offer significant value in today's market. Schwab US Large Cap Growth ETF tracks the Dow Jones US Large Cap Growth Total Stock Market Index, which includes stocks of large companies with high growth potential. This ETF is ideal for investors seeking long-term capital growth. The fund has an impressive 10-year average annual return of 15.99%, making it one of the most successful ETFs in the large cap growth category. iShares U.S. Treasury Bond ETF is a basic U.S. government bond index fund designed to replicate the performance of the ICE U.S. Treasury Core Bond Index. This fund includes long-term Treasury securities with maturities between 1 and 30 years. The fund has $25 billion in assets. While government bonds may seem boring to some, the interest they pay and the return of principal are guaranteed by the full faith and credit of the U.S. government. They are among the safest investments. However, this is not the only reason they are on this list. High-quality bonds react very predictably to fluctuations in interest rates. When rates go up, bond prices go down. Conversely, when rates fall, bonds rise. Stubborn inflation has complicated the interest rate environment, but the fact remains that the next move in rates is likely to be down. If and when rates start to drop, the share price of GoVT should react favorably. By that standard, GoVT may be very cheap indeed. The fund has a low expense ratio of 0.05% and a 12-month yield of 2.9%. iShares Mortgage Real Estate Capped ETF. From a relative value standpoint, REIM can be considered a cheap ETF. REIM is a mortgage REIT with an exceptionally high dividend yield. The fund's trailing 12-month yield stands at 10%. REIM tracks the well-known FTSE Nareit All Mortgage Capped Index. The fund's expense ratio is 0.48%, which helps REIM avoid tracking errors. REIM has current assets of over $587 million. REITs are not bonds, but REIM holds residential and commercial mortgage bonds, and REITs share some important characteristics with bonds. Notably, they have an inverse relationship with interest rates. In other words, when rates fall, REITs tend to rise, just like fixed income products. Direction Nasdaq 100 equal WTOD ETF is an index ETF that tracks the performance of the Nasdaq 100, distributing the weight of the stocks evenly among all the companies in the index. This allows investors to reduce concentration risks and access companies of different market capitalizations within a single index. The fund boasts an impressive 10-year average annual return of 13.27%. Making it attractive for long-term investors. Invesco Financial Preferred ETF. As a class of securities, preferred stocks are quite cheap right now. That's because preferreds tend to fall as rates rise. And as investors know all too well, rates have gone up significantly since the end of the COVID-19 pandemic. But what goes up must come down. When rates do start to fall, preferred stocks and other income vehicles will reflect that reality and should see sustained capital appreciation. Invesco Financial Preferred ETF is an index ETF based on the ICE exchange, listed fixed rate financial preferred securities index. The marked increase in rates our economy has seen over the past several years created good value in preferred stocks in general and financial preferreds in particular. This fact makes PGF potentially very cheap indeed. The fund's expense ratio of 0.56% is not unreasonable, and the current 12-month yield of 6.4% is quite attractive. iShares S&P Small Cap 600 Value ETF, one of the best ways for individual investors to find cheap stocks is to have expert portfolio managers do it for them. That's the investment rationale behind IJS. IJS is an index ETF with $6.7 billion in assets under management. The fund closely tracks the S&P Small Cap 600 Value Index. The index and the fund hold small cap stocks that are considered undervalued compared to the market and the universe of small caps. This ETF can always be considered cheap because when a portfolio holding becomes expensive, it's dropped from the index and sold from the fund. Another reason to look at IJS as a cheap ETF is the fact that small caps have greatly underperformed large caps. It's impossible to say how long this trend will continue, but it won't be forever. The tables will turn, and when they do, IJS will look like a bargain at today's share price. Additionally, IJS is a low-cost fund with an expense ratio of just 0.118%. You shouldn't buy it for the income, but investors will nevertheless appreciate the 12-month yield of 1.6%. SPDR S&P 500 ESG ETF tracks the S&P 500 ESG index, which includes companies that meet high environmental, social, and governance (ESG) standards. This allows investors to invest in large companies while supporting sustainable development and social responsibility. Since its inception on July 27, 2020, the fund has shown an average annual return of 15.24%, making it one of the leaders among ESG funds. Vanguard Value Index Fund ETF is cheap by the same measures as IJS, the previous entrant on my list, but VTV invests in large cap rather than small cap stocks. VTV is a $164 billion ETF that mirrors the CRSP US Large Cap Value Index, which is a broad-based equity index made up of stocks that are considered cheap or undervalued by current market standards. Investors in Vanguard funds have come to expect low fees and expenses. VTV does not disappoint in that regard. The fund's expense ratio comes in at just 0.04%. Growth stocks have led the way so far this year, but VTV has managed a respectable year-to-date return of 10.1%. When value stocks return to favor, the total return of VTV should improve from there. Income-wise, VTV has a trailing 12-month yield of 2.5%. That yield will serve to enhance returns on the upside and protect capital on the downside. Vanguard Mid-Cap Value Index Fund ETF shares. With both a small cap and a large cap ETF featured on this list, it only makes sense to include a mid-cap fund next. VOE is an excellent example of a low-cost ETF for investors who see value in the mid-cap stock market segment. The CRSP US Mid-Cap Value Index comprises mid-cap stocks thought to represent very good value compared to the entire mid-cap universe. VOE is a $28 billion Vanguard Index ETF that very closely tracks that index. In other words, VOE buys and holds cheap stocks, making it a cheap ETF. The index and VOE have experienced very little security turnover recently. Investors should not expect to see high levels of internal buying and selling. Typical of Vanguard funds, the fund's expense ratio is low, at just 0.07%. This fund features a nice trailing yield of 2.2% as well. SPDR Blackstone Senior Loan ETF is a fixed income fund, but it is not a typical or traditional one. SRLN invests in a unique kind of security called bank loans. Bank loan funds buy and hold floating rate loans that have been issued by regional and national banks and securitized into bonds by Wall Street investment bankers. Like most income funds, SRLN looks cheap right now. It should do quite well in the coming months if and when interest rates begin to moderate. SRLN has $6.4 billion in AUM and is a part of the well-respected SPDR family of ETFs. The fund has a reasonable expense ratio of 0.7% and an exceptional trailing yield of 8.8%. The yield makes this fund attractive for investors looking for current income, as well as for those looking for bargains in the ETF market. If you want to build your initial capital but feel that you lack financial literacy and knowledge of investment strategies, I suggest you subscribe to my channel and write the word investments in the comments. I will send you a detailed guide on investments and an effective strategy with 3 ways to invest your money so that it generates passive income for you throughout your life, all for free. The money will truly start accumulating in your accounts, and you will have more of it. Check it out. Write investments in the comments and start learning.